Hey everyone, thank you for tuning in and let's see what is going on. The reason why you should tune in as much as you can, like every day or so, well, most of my students know this, but the market's like this ongoing narrative. And people say to me, like, oh, gee, Mark, you make these great calls. So it seems like you always know when the market's turning, blah, blah, blah. And I'm not a psychic and I'm not some kind of a genius, but if you watch the market every day, you kind of see what's going on. Oh, now this particular sector is important and it's at resistance. Maybe it's overbought. Oh, this particular stock is oversold. Things shift in out of importance at different times. It's sometimes important to watch the tech stocks. Sometimes it's important to watch the healthcare stocks. I mean, it changes all the time. So the market's like this ongoing drama. And that's kind of what I like about it. So let's see what happened today. And I kind of watched it. I kind of didn't. I'm doing some home repairs over here and been, dealing with whatever, carpenters or whatever contractors. All right. I'm sure you guys don't really care, but I'm sure you know what I'm talking about. Okay, so anyway, whatever. All right. So S&P, okay, here's our SPY. Didn't really do that much today. Here's where I'm looking for some good ideas for some pretty nice trades. The China trade. Okay. Now I know a lot of you don't want to invest your money in China because of their ethical and philosophical issues, which I completely understand. But I just want to point this out. Notice how, this is FXI. This is the China Large Cap Fund. It's an ETF I follow. It's an iShares ETF. Got down here to 2090, 21 back in November of 22, found support and rallied. Okay. Guess what else happened? Well, about, I don't know, 2 weeks ago, you got to the same level and rallied again. How is this happen? How is it possible that a market gets to the level that was support before and becomes support again? Well, it's psychology, it's remorse. There's a lot of people that sold at the bottom here when they were panicking, when this thing was in a full-flown blow up, and they sold, and then the market went higher, and they're like, "Oh man," a lot of them were really like, "Oh, I shouldn't have done this," so forth and so on. If the price ever gets back to the level I sold at, I'm buying my shares back. So finally, a year and a half later, guess what? It gets back to that same price level within a couple cents, 10 cents maybe, and it rallies. Now, why did it find support? Well, like I described, remorseful sellers buying their shares back. Why does it rally? Well, when you get to a support level, that's a level where there's a lot of investors who want to buy. Some of them start to get anxious because they think that there are other buyers coming into the market and they're going to outbid them. So you're they're willing to pay 20.90, but if someone else comes in and is willing to pay 21, the sellers are going to go to whoever is willing to pay 21. Makes sense, right? So someone who is going to pay 20.90 is like, okay, I'm going to go to 21.10. And it starts this snowball effect and it results in a rally. Now, the last time we got here was not that long ago. It was January 22nd. Within 2 days, this thing rallied about 9.5%. If you go into ETF world, which we do a lot here at Stock Market Jobber, because the ETF world is wonderful for traders. It gives them so many different options. And when I first started doing this, ETFs didn't even exist. But in the same time period, what did yin do? This is a leveraged ETF. It's designed to move by about 3 times as much in the same direction as the Chinese stock market. So it could be a great vehicle if you're on the right side of the trade. You have to be careful though, because if you're on the wrong side of the trade, it can go against you. Obviously, we all know that. But in the same time period, look at this. In 2 days, this thing rallied 31%. 31% in 2 days. And this is the ETF. There are options on this ETF that probably went up a dozenfold. I don't want to give specific numbers because I don't know, but anyway, the best traders let the market tell them what to do. They don't guess. And right now, the market is telling me dude, there is something going to go on. There's something that's about to go on with this China trade. So keep an eye on it. On the other side of the coin, if this thing actually breaks, I don't think it's going to, but if the support level breaks and the market tells us, hey, we're going lower, there's the yang. This is the opposite of yin. This is designed to go in the opposite direction of the Chinese market, but 3 times as much. So if you're not an options trader and you think China's going to go down, you can buy this. If the Chinese market's up 1%, this will be down 3% approximately, and so on. So anyway, I don't want to get you all too confused, but just to reiterate real quick, FXI, China large cap ETF, getting close to support. A lot of times when things get to support, they tend to move higher. If the move does happen, yin is going to be a place to make some nice money. All right, that's the China idea. Now, on the short side, meaning where the market might go down, but I would say don't short stocks. If you think something's going to go down, buy puts. And if you're a little confused or you're interested in learning about more about options, you can take our options class or take my Benzinga options class. But there's always ways to make money. So I'm going to go look at the sector of consumer staples. Look at this. Things overextended. Good chance it's going to reverse. So what I did was I went and I looked at the stocks that are in the consumer staples sector. We can do that because the Spider ETF, which what we're looking at is XLP, is consumer staples. It's an ETF that follows the consumer staples sector. And if we look at the holdings, we can see some of the companies, Procter & Gamble, Costco, Pepsi, Walmart. So if this sector is about to reverse, there are stocks that are within this sector that will reverse more. When we look at the sector, this is the average. This is the aggregate of all these stocks. And these are just the top 10, all the stocks that are within this sector. So because by definition, this is the average, there are going to be stocks that move more and there are going to be stocks that move less. So the narrative or the thesis is that we're going to be looking for a reversal in staples. So I went through the stocks. So you don't need to, but you should though. You should, because everyone sees something different. You might see something I don't see. And the odds of that are really good because everyone looks at stocks in a different way. That's why we have markets. I saw Walmart. Walmart looks to me a little bit vulnerable, and I will show you why. And this might be an idea for a short side trader, meaning buying puts. We reached a level that was resistance before. When we get to levels that were resistance before, there tends to be resistance again because there's people who bought at that resistance that when the next day the stock like can freaking collapse or like, oh man, what did I do? If it ever gets back to my level, I'm going to sell and get out at break even. So if something gets to a level that was resistance before, there's a tendency for there to be resistance again. And that's what's happened here with Walmart. Now, some of the traders who want to sell, the ones who created the resistance with their sellers, might start looking around and be like, wow, man, there's other sellers coming into the market here. Just like the opposite of support, the sellers are going to be like, I better reduce the price I'm willing to sell it because the buyers are going to go to who is ever is willing to sell at the lowest price. So then the sellers start to undercut each other and it creates this snowball effect. Oops, sorry. Just have a little sip of Diet Coke there. Okay, just to reiterate, the best traders let the markets tell them what to do. We looked at the staple sector, it's overbought. Good chance there's a reversal. Think it's going to be important to watch oil here, right? Getting close to a level that was support before. Could see some kind of a rally there. Facebook, amazingly overbought. Going to be a reversal at some point. I don't know where the stock is going to be within 5 years. That's not what I do. But In the short term, things get overextended. Could be a reversal. Here's what we do. I'm going to end it with my favorite analogy here. Okay, as traders, technical traders, we trade off imbalances. We're looking for things that are out of equilibrium. No, we're not looking to say, oh, this stock in 5 years is going to be worth this. Picture a market where the market guys, it's a farmer's market. Everyone's watching the farmer's market. People from all over bring their goods to the market. Well, let's just say there's a shortage in carrots. Okay. Usually 10 cartloads come into the carrots, 10 cartloads of carrots come into this market whenever it operates. Say it's every Saturday. Well, maybe this Saturday, only 3 cartloads of carrots come in. What does that mean? There's a low supply of carrots. The price of carrots might go higher because when people come into the market who want to buy carrots, they're going to find out, wow, there's a shortage of carrots. There's a lot of people that want to buy carrots. So it's kind of in the seller's hands to dictate the price. So if I want to buy carrots, I have to be willing to pay a higher price. There is not enough supply to fill the demand, or there is too much demand to that the supply won't satiate it. You can look at it either way. Regardless, the price of carrots will go up in the short term. Maybe there's a huge carrot harvest. I don't know much about carrots, although I know my guinea pigs like to eat them, but there's a lot of sugar in them. So you shouldn't give your guinea pigs carrots too much, maybe a little treat once a week or two. But regardless, as traders, we're looking for short term imbalances in supply and demand because when that happens, things move. And when things move, as traders, that's what we're looking for. All right, everyone. Thanks so much for tuning in. Thanks for listening to my rant, and I will see you soon.